This is the briefing for Friday, February 9th. Well, coming up into the end of the week and the beginning of the week, and last week I talked about the fact that this rally was a very weak rally from an internal perspective. Typically, that leads to a price correction, which we have not seen. Yet, there is always a smaller probability that the internals will correct to support price. And I think that's kind of what we're beginning to see through this week. Now, the one thing that I'm most concerned about, and I discussed it in last night's briefing, is the fact that volume is collapsed. It is just really just extremely low and continuing to go lower. And volume is the fuel that generates the energy for a trend to be continued. With a lack of volume, that means there's a lack of buyers in this case to support the trend, and typically you're going to see some type of rotation. Now, this is the spiders on a daily basis, and you can see that this is pretty significant drop in volume. Now, and also we still have a pretty good divergence in breadth in the S&P 500. This is actually NYSE breadth. So no, I'm sorry. This is S&P. This is the S&P 500 breadth. So you can see there's still a pretty good divergence in that. But 52-week highs minus 52-week lows are beginning to improve. So that is a positive for support of what's happening price-wise. Intermarket divergences are existing, and you can see here, this is the Qs representing the NASDAQ. Volume absolutely collapsing on it, but the divergence in NASDAQ breadth has been eliminated. So that's another positive for the current rally. In the Russell has diverged intermarketly with the other two indices, and you can see that. This is the all-time high in the Russell, and you can see it's lagging pretty much where the S&P and the NASDAQ have both made new highs. Volume collapsing on the Russell also, although improving slightly today. And the divergence in the Russell is basically eliminated also. So we do have some strengthening within the indices to support the rally and support price. Intermarket divergences, they are usually reconciled with each other, but we never know how they're going to be reconciled, whether the Russell is showing us a little bit of weakness here, and the other indices will turn to eliminate it, or whether the Russell still has a ways to go. Now, one thing to consider, this 200 level is upside resistance, and it's approaching it today. We closed at the high of the day. It suggests that the indices will go higher on Monday. Trading above 200 is going to open up trading up to this high at the 205. Let's see what that is. That's 205.50 area. And then potentially beyond. So the Russell could be a good trade for next week. Keep that in mind. Now, looking at where we are in terms of overbought and oversold, we spent most of the week in neutral territory. As you can see in the NYSE, the NASDAQ is approaching an overbought condition, but it's still not there yet, and the NYSE still has some place to go. So it's really not giving us a lot of help unless we reach an extreme condition, extreme overbought or extreme oversold condition. Total volume has a story to tell, and that is, you can see what's happening with NYSE volume. It is absolutely collapsing. And with NASDAQ volume, you can see it's improved this week slightly. This goes back to Wednesday's trading, Wednesday, Thursday, and today's trading. So you can see that we had a little bit of improvement in volume in the NASDAQ, the total volume in the NASDAQ going into the end of this week. Now, looking at the other internal components, the percentage of stocks above the 50 and 200-day moving average for the NYSE, you can see, this is the S&P 500. So you can see the decline, the deterioration that was occurring, or that has occurred over the past couple weeks in the S&P. Same thing with the 200-day moving average. I would watch this 65 level here for the 200-day. And you can see that this is kind of like a little bit of rotation area for the percentage of stocks above the 200-day moving average. I think if that 65 were to be broken, it might be telling us a pretty good story about the weakness coming back into the market from an internal perspective. Percentage of stocks in the NASDAQ above the 50 and 200-day moving average. You can see the deterioration that's occurred in the 50-day moving average. Same thing with the 200-day moving average. A little bit of improvement going into the end of this week. This was Tuesday, Wednesday, Thursday, and Friday. So you can see the improvement. But the thing to keep in mind here is that if you go back, this is about the 45% trading above their 50-day moving average. That would give us a price inequality at about the 380 area right here. So you can see that the where the market is now from 380 to 537 based on where this was previously. So you can see this was supported at the 45 level at that price, but it is really not supporting price now at the 500, 437, 500 level. I think that, yeah, it's 437 for the NASDAQ. And the same thing with the 200-day moving average. Watch about the 52 area. If that's broken, it's going to suggest weakness coming back into the market. And the Russell, basically the same thing. Really a lot of deterioration over the past couple weeks in that, but it spiked up in today's trading. It's Tuesday, Wednesday, Thursday, Friday. So you can see there's some slight improvement in the internals of the market, but certainly we want to be careful of the potential that what is concerning is volume. Volume is just really, really low, and that is the main component that has the fuel that drives the market, that drives the car. Now, I did one other thing, and I want to show this. It's a little rough, or a little crude, I should say, at least for right now. But I wanted to see what was happening with the Magnificent Seven stocks. So I overlaid line charts for the seven stocks, the Magnificent Seven, and I wanted to kind of see if they were driving the market. They were driving the majority of the market, but what's interesting is the seven stocks, and it's difficult. This is obviously NVIDIA. This is Meta, and I forgot what this one is. I have to look it up. I've got to figure a way to annotate these so it's easy to see which color is which stock. This is Tesla, for sure, and then you can see what's happening now. The separation that's occurring. This is trending down. Tesla is trending down. These other stocks within the Magnificent Seven are beginning to trend down or level off. And the same thing with these here, although this stock had somewhat of a decent week today as well. But it's pretty interesting to look and see what the general trend of these are. And if you're going to see some type of divergence between these stocks that are highly weighted in both the NASDAQ and some of them in the S&P, it's pretty interesting to see if they're going to be a deterioration or some type of divergence. But I'm going to be watching what happens with these in particular. I'm kind of eliminating NVIDIA because it is just way out of range. But it's going to be important to see if we start to see any of these beginning to turn down, then we could begin to see some type of deterioration in the market as well. Once again, my most concern, I mean, we have to respect the development of price, and the development of price is up, and that's pretty obvious, as you can see right through this trend. But this is most concerning, this part of the rally in terms of volume. Have a great weekend, and I will pick this back up again for subscribers on Monday.